Hey everyone, it's James at Eurevo, New York's #1 commission rebate brokerage, with our year-end December 2022 Manhattan market update. And first on mortgage rates, a bit of good news there. They're still elevated, but they've come down and they basically stabilized in the low 6-ish range, about 6.25, and that's despite the Fed raising rates again 2 weeks ago. So you can see the Fed raised rates 0.5%, and mortgage rates, they didn't really change. If we take a further step back and we compare to where we were in the let's call it mid of September, we are up a full 2 percentage points on the Fed rate, and you can see here mortgage rates are up a little bit, maybe 1/4 point, 1/2 point, but certainly not 2 percentage points. So this is just your monthly reminder that the Fed rate does not directly impact mortgage rates. When we look at contract activity, we are down 43% compared to December of 2021. The last 3 months have all been in a very tight range, down 43 to 46%. And we will look at that by price point. The high end continues to be the laggard, down about 57% year over year. Like we've been saying for the last couple of months, that's mostly a function of tough comparisons. The high end was just very, very strong. But even on an absolute basis, the high end is the laggard among these price points. On inventory, we have continued to get this one right. We have seen inventory stay very much under control. We're up 3% year over year, and we don't really think this is going to change going forward. Obviously, on an absolute basis, we're going to have more inventory hit the market as we go into the spring, but there are a lot of would-be sellers who are locked into their current place and don't have to sell, so they're not going to sell. Even when we look at this by price point, when I was updating these numbers, they moved around plus or minus 1%. There was really very little change. So that's really what's supporting the market in terms of pricing. Prices are certainly down, but they're not down a ton. There are no fire sales out there. We have tons of buyers who say, I want a deal. I want someone who has to sell, a forced seller. Well, so does everyone else. Those sellers don't really exist in today's market. Pricing is okay, and that's because inventory is very much under control despite the decline in demand. So the thing we're going to be watching as we go into the new year, obviously inventory. If that were to get out of hand and inventory were to go up 10, 20, 30%, that would be a different ball game. And then also just how quickly buyers adjust to higher mortgage rates. And I should say that the mortgage chart that we were looking at before, where the 30-year fix was around 6%, those are national numbers. We are not seeing that as much here in New York. In fact, I had a buyer last week who was quoted 4.875% for, wasn't a 30-year fix, but it was a 10-6 ARM, which I would definitely, if you're not sure of the difference or which one you should go with, you should reach out to us or talk to your loan officer because it makes sense for a lot of buyers. In any case, we're seeing a lot of buyers get quoted around 5%. So as more buyers come into the market and they just accept that mortgage rates where they are, that could be a big driver of increased activity going forward. So we will keep you updated, obviously. If you want to slice and dice this data, we'd be happy to. We'd happy to talk about your specific search, happy to help with your search, and of course, happy to get you a commission rebate. So thanks for watching, and we'll see you next year. Thanks. Bye.